Hey investors, thank you so much for joining me. My name is Michael from Deep Value Returns on Seeking Alpha. Today I want to talk about Uber. Uber just reported their Q4 21 results and I'm going to go through that. So investors so far quite delighted about it. The stock is up approximately 5% pre-market. Indeed, the top line is very strong. We're going to go through and unpick some of that top line. Going to give some context around its bottom line profitability, and then I'm going to put a spotlight on its balance sheet. So this is a stock that some people wrote to me asking me, Michael, can you cover this one? So this one's, a pleasure to kind of talk about. So it's been, a rocky ride for investors. The past 6 months, Uber's share price has been really kind of all over the place, and it's surprisingly held up quite strongly as a kind of quote unquote tech stock. Um, I suspect a portion of this has been investors kind of playing into the COVID losers. You remember these are the stocks that didn't do particularly well, and as the economy reopens, they would have very strong performance coming out of that, and that would lead the stock to do quite well. So there's been kind of a change of sentiment all the time, particularly as Omicron was kind of in the news a lot, and then not, and then there's just been a lot of noise hitting the airways, and this has impacted Uber, as you can see here with its top line. But when they ultimately report their financials, Q4 was up 83% year over year. So let's keep this in mind, right? So obviously Q4 of last year was weak. They were negative 24%. So against that easy comp, I was always expecting them to do quite well, but 83% is really really strong. Okay, there's just simply no denying that. Okay. My question is, before we kind of go further, is how is it going to start to compare as we come into the second quarter of 2022 and compare to the tougher comp against Q2 2021? Because the first quarter is going to be an easy one. They talked about in their guidance. They don't give you revenue guidance, but they talk about bookings. So bookings are pointed to be up approximately 33% for the next quarter. Now, if you think about this, right, so they just left Q4 with bookings up approximately 50%. So there's a kind of a slight step down, and Q1 is going to be the easiest comp. So when we get kind of further into 2022, I'm kind of thinking to myself, okay, this is going to be tough for them. You know, we'll see how it goes, but that's one of the things that kind of springs to my mind straight away. Now, let's just go through this here. So the one thing that I think Uber has done quite well is increase the monthly active platform consumers. So this number was up 27% year over year. And this is strong because it tells you that consumers are becoming more and more more and more frequent customers of Uber's platform. So this includes, if they've used freight, delivery, whatever they've used, like mobility, whatever they've used, this is recognized in this figure. So they're doing really, really strongly. What they've done even better has been in their pricing power. So bookings were up 51% year over year. Okay, so this is you're getting that strong combination of more people using the platform and bookings going up, which is really what you want to see, right? So it's a healthy, balanced. I personally, as an investor, I much prefer to see the number of customers using the platform increasing and not that reliance on increased bookings. But different investors invest differently. One of the things that I think was quite interesting is that bookings were up, driven predominantly by freight. Now, freight, they made the acquisition of Transplace, and they spent just over 2 billion on that. So that was incorporated into the freight. And I just, freight has been something that's been so hot in the market right now. I would just hope that they haven't overpaid for that. I don't really know how that's going to play out. They talk about that for Q1, 600 million of bookings will come from Transplay. So they're getting some inorganic growth there. But for all intents and purposes, it's a well-rounded number. They've done well. They should tap themselves on the back. Now, this is the thing, when it comes to investing, it really depends a lot about the sentiment at the time. And back in, when this came out, an IPO, everyone was like, oh, it doesn't matter about profitability, they're gonna nail this. And the stock is expensive, 80 billion. and you kind of seeing just like less than 100 million of EBITDA, and I'm like, really? I think it's tough. I think it's tough. I can't, I'm just trying to kind of scratch my head here. How could I see an angle? How can I see a bullish angle here? It's kind of difficult. So yes, they are improving substantially. It's gone from a negative 454 million to a positive number. So yeah, great. You know, they've done really, really well. Swung that round to profit. Great. You know, but is this really worthwhile investing on that basis? You know, the business really just doesn't make any free cash flow. So I'm kind of thinking myself, it's a tough one. So here's a few things that I wanted to kind of highlight. I mean, this is by no means an exclusive list. It's just some things that I was kind of looking for. I was like, okay, this is interesting. So Uber carries approximately 4 billion of cash and cash equivalents. Fantastic, right? Wow, a lot of cash, right? 80 billion markup, a lot of cash. But then I look through and the balance sheet, and they have approximately. So this highlight here is from Q3 because they haven't reported the 10K yet at the time I'm doing this. But you can see on the Q3, the SEC filing, you can see the interest rates on some of those senior notes, and a lot of them in the high single digits. So with interest rates kind of around less than, like 1.8 or so, it's kind of, and you're paying, high single digits for the interest rates on your notes, you're kind of like, doesn't leave a lot for shareholders because you have 4 billion in cash and then you have more than 9 billion of debt. So it's kind of like one thing. And then I kind of noted as well that off balance sheet they carry an extra 700 million in credit notes. So when you have 9 billion of debt, the 700 billion is not really a big deal. It's not really worth talking about, but it's just another thing that you kind of like, okay, when am I as a shareholder actually going to get the return here? Another thing that is interesting is that they have these kind of insurance costs reserves against them, and they come up to approximately just under 4 billion. So you have the debt, you have the off-balance sheet debt, you have the insurance liabilities against the company as well. So it's kind of like, oh man, it's going to be a tough hurdle until shareholders actually start to see a return on investment here. On a positive note, they have nearly just under 13 billion of equity in other companies. Now, that's great. 13 billion is a huge number, right? If your market cap is 80 billion and you have 13 billion in equity in other companies, that's really, really strong, Some great investments they've made. But then, it's a mark to market as well, and I haven't got the updated figures here, but they had to impair Didi by approximately 2 billion. 1.5 billion, sorry, something like that, 1.5 billion. So yes, they do have a lot of these kind of investments in great companies, but then they take these impairments, and you're like, is it really worthwhile getting involved with Uber? Kind of, I know that a lot of people that I read point this out. Yeah, they've got other great investments, and it gives you a margin of safety. I'm thinking to myself, no, I don't see that margin of safety. That's perhaps just me. Anyway, I just kind of think that this personally for me goes into my too hard pile. I see that there are so many really great investments right now, particularly in small and mid-cap tech stocks. I mean, they've been really battered, and there's many of them that are really growing really, really fast, generating nice margins, sustainable margins, free cash flow. You're paying very low multiples, and I think that in those contexts, there probably is a much better opportunities elsewhere. If you want to find out those opportunities, don't forget to check out my marketplace, right? They're above the screen. Deep value returns. Come on board, check out what other people said, read the reviews from marketplace. Yeah, get involved, and I give you high quality, actionable investment insights. Okay? Thank you so much for listening. See you next time. Bye bye.